Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. We're seeing a consolidation of risk sentiment right now. You've seen the equity market start off hot, came back in a little bit. The Dow is holding green, though. Some of the earnings this morning have kept that Dow up, but the NASDAQ is what's been down about 1%. It's been leading the way lower. You're seeing Amazon, you're seeing Facebook, you're seeing some of those stocks take a big hit. Microsoft is down big too, and the semiconductors are also down about 1.5%. Apple's quiet ahead of earnings later today, but it's going to be tech over the next couple of days that's going to really lead some direction in this market. But also we have the U.S. and China trade talks start tomorrow and the Fed meeting. So got to stay nimble. We've been talking about this all week. The market's consolidating, looking for a catalyst to move in either direction. But remember, right now, you're looking at that March hike. It's a 1.3% priced in probability of the Fed hiking rates in March. So you look back at that Wall Street Journal article on Friday, they're saying that the Fed is weighing ending the wind down of their balance sheet, ending the quantitative tightening. If this happens, that's a dovish move, and the stock market would likely rally. We don't see that happening. In fact, we imagine that probability of a rate hike in March, given the current market conditions, that probability would actually go up from where it is right now, which we imagine would weigh on the stock market. So stay nimble. Again, we're consolidating, looking for a catalyst to move in either direction. And again, the U.S. and China trade talks as well. And if you get positive news on trade, that can help the market. The market is already pricing in some positive news, though. So if you get bad news there or no news there, then you might see some of that air come out of the balloon on hope. Now moving on, you see crude oil as actually one of the better performers today. Those sanctions that the U.S. imposed on Venezuela. We touched on it in a Bloomberg interview today. I spoke about how Venezuela exports 500,000 barrels per day to the U.S. And that's important. And these sanctions, though, have lifted the market, but ultimately, a lot of this is already priced in. The saga did not start yesterday. You're seeing that as well as OPEC jawboning, really keeping the market, crude oil, up at this level because inventories surely aren't. Now, these inventories come back into the picture, and we think that could, again, weigh on the market. The big support area to watch at is about $52. We're not near there now. We're back up near the higher end of the range, $54. And when we've talked about this range, we didn't really talk about it yesterday in the Morning Express, but we talked about it last week, about 52 to 54. And you need to see it close out directionally out of there and to really start to get the market moving. And again, there's still support and resistance on either side of that, but we're in this consolidation pattern, just as in the equity market, waiting for a catalyst to move in either direction. Now, lastly, talking about gold, talking about the dollar, we did pound the table today in the Morning Express that we advise clients to take gold off. We've been long gold. We've been very bullish gold. We've been sort of trading and capitalizing on moves like that on Friday that we saw. But ultimately, right now, again, talk about the Fed. You're seeing more of a dovish rhetoric being thought to be priced in. We don't see the Fed taking that step down dovish lane quite yet. So that could bring gold in a little bit. It could boost the dollar ultimately a bit as well. But those are going to be some opportunities, and you want to be ready for those opportunities. So managing your trades right now will become more and more important. Give us a call. We're here to help with this. 312-278-0500. You can email us at info@bluelinefutures.com. You can call us again at 312-278-0500. But you check our website for updates. You can also sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.